When I meet the founders, I basically look at how good the founders are in what they want to do and how committed they are in what they want to do.
There are about 378,000 HNIs as per rural list in India. Chennai has 22,800. So you can imagine the potential that the HNI group.
The early stage, my view is that risk is the reward. So that means you don't look at risk versus reward. Good evening all. So welcome to Mr. Vikram and Mr. Krishna. I am not an investor by profession. So, after signing up to Startup Singam, I have to do many things, learn on the job and do many things. So this is one such activity. So maybe I'll start with how I became an investor and what really helped me. Right. So when I, in fact, the session on AIF was very interesting because I have never been formally through a session like that. So I learned, okay, there are so many things in investing during the presentation. Because what I do is I have some personal money and I have some money in our company. Since the company does not have any other business, the only business is, and I'm not interested in starting another product given my age and health. So I thought I will just invest the money in other startups which can use the money and grow. So that's the whole idea. And when I meet the founders, I basically look at, how good the founders are in what they want to do and how committed they are in what they want to do and what gives them a right to succeed. And most importantly, I look for what I would call as asymmetries. Basically, asymmetry is like there is something in technology that they have that other people don't have. Or there is something about the market that they know, some market insight that other people don't have. Or there is, some, you can even say some arbitrage that they have because of the position they are in that others don't have. So these are all sort of the lenses over a period of time, when I started and when I was running a company, when I look at what is the prospect for my product and how can I actually, build a product where the investment I make compounds every day. Because that's what is important. So when you make an investment, your investment has the potential of compounding every day. So the longer you stay with the investment, the bigger your returns are because it compounds every day. For that investment to compound, you what in most people call as a moat. So basically you have these asymmetries, looking at all the asymmetry is very important. So I basically look at all of them based on my own knowledge and my own experience. And I would say a lot of times, I'm a very emotional person. So the decision is finally driven by, what my emotions are. And that's how I go about my investment. And I must say I've been lucky. In fact, many of the investments that I've done well were investments where I was able to make a decision within the first 30 minutes of meeting the founders. In fact, Heyman Bala told me that they had prepared a presentation and they made a presentation and things like that. They didn't make a presentation to me. I don't think I have seen the presentation. They have never showed it to me. So basically during a casual conversation, over breakfast, if I remember right, we made a decision halfway through our breakfast and enjoyed the rest of the breakfast. So that's my typical decision-making method, right? If there is some method to that madness, but I would like to listen to Krishna and Vikram on how to scientifically do that. So I am also here to learn. Thank you.
Awesome. I think it's it's really an honor to be here, and I always look for opportunities to come to Chennai. My first ever investment in my investment career was actually in Tamil Nadu. Kaveri Medical Center was my first investment. So I have a lot of personal attachment with this place. So interestingly, my story goes back to, so I actually learned the word private equity in 2007-8. And before that, I was, working in other companies. I worked in pharma, I worked in consulting, I worked in the US on technology side. So that was my background. And then I joined the Piramal Group, where I set up India's first healthcare life sciences private equity fund. And it was from that fund where I had invested in Kaveri Medical Center, which was a very amazing experience, I would say. And I think I learned a lot, and I learned a lot about, the local cultures here also. And I realized that there is a lot of emotional connect here. And I think that experience of setting up that fund at Piramal's, where I raised about 400 crores in 2008, when the markets were really bad, it was actually a very, I would say, learning experience. Raising all domestic capital from 32 Indian financial institutions was actually quite an experience. And that was the first time I realized that there is so much capital sitting in India that actually one can actually raise. And as luck would have it, Piramal sold their healthcare business to Abbott, which was one of the largest deals of its time. And they didn't want to continue working on that fund. So I moved on to set up IvyCap Ventures in 2011. And it's quite interesting. I'm an entrepreneur at heart. And when I moved back from US in 2005, my objective was to start up my own business. And at that time, I had no clue about, how to be even an entrepreneur. I had no clue how to go about becoming an entrepreneur. And I had an idea, and I thought I will do it in India. I set up a business in medical tourism, and realized that I had no team, no capital, absolutely nothing. So I realized very soon that, this was not going to work. And that's how my first entrepreneur journey started. And then when I learned the concept of private equity, I realized, wow, now I can fund entrepreneurs, and I can live my entrepreneurial journey through somebody else by partnering with them. So that was the real excitement for me. But then the concept of IvyCap came up, when I realized that, first of all my savings I had invested in my own startup, and I had almost left with no savings. So effectively, on the day when I started IvyCap, I had almost zero savings. And I had no team. It was like, just myself. But I came up with the idea thinking that, just like we were talking here, and there's a lot to learn from the way this whole platform has been set up. I think this whole community aspect is what really came to my mind, that unless I bring a community together which is emotionally connected with each other. And I think that emotional connect, and I think what you were talking about is exactly that. Emotional connect becomes very important when you're investing in others. And the only asset of that, the key asset that I had was my background from IIT Delhi. And I said, okay, let me leverage that emotional connect and go to the entire IIT ecosystem and tell them that, look, I'm going to set up a fund which initially I'm going to put only into IITians, and I will give back part of 25% of my profit that I'm going to make back to IITs to set up endowments in the country. And that concept actually emotionally connected a lot with people. And I hacked into LinkedIn. At that time, LinkedIn used to be very hackable. So I downloaded 75,000 alumni database and reached out to them saying, I'm raising 200 crores and I'm going to invest in IIT alumni. And I'm going to really, I need 1 day of your month for mentorship if you would like to give. And would you like to invest in the fund? And I received 25,000 responses in a very short period of time. People loved the idea of this endowment that, we loved this idea of giving back to the ecosystem. So in the process, I was able to raise 240 crores, my first fund. And that was something which was kind of very satisfying. And also the fact that I had a lot of institutional investors during the Piramal fundraise. So I went back to a lot of institutions and was able to raise 80% of my capital from actually Indian institutions in my first fund itself. So with that, I started investing. 2013 to 15, I made my first fund investments. And then I started working on my second fund, targeting 500 crores, raised 530 crores. Got lot more institutional investors, lot more alumni on board. Invested that fund into 23 companies. First fund was in 10 companies, second fund is 23 companies. Third fund was targeting 1,500 crores. My first close happened at 1,600 crores. I raised 2,100 crores in my third fund. And in the process, this whole concept of the alumni ecosystem and the give back, I actually conceptualized India's first endowment fund, which was set up at IIT Delhi, which was launched by the Honorable President at Rashtrapati Bhavan. And I have another passion, which is a passion for music. So I composed a song for this endowment fund where I got a few successful IIT Delhi alumni who actually were successful entrepreneurs. And that song was, in fact, played at Rashtrapati Bhavan at the time of the launch. So that was a high moment for me personally. But that was something that created the emotional connect. Because when that song became viral to the entire alumni community, that's when they learned about this endowment fund, and that's when they started contributing to that endowment fund. And, so basically, we typically try to understand from the entrepreneurs the why part, what is driving you, what is motivating you. And I tell people that the why part for IvyCap is this endowment. So what is driving me personally is this give back to the system. And in the process, we now actually created endowment give back from our own funds of almost 200 crores to be given back to the IITs, IIMs, and other education institutions. Now we expanded to other education institutions. And in the process, I think we've been very fortunate to be here where we are. So, just wanted to give that background. So I don't want to take all the time here. I'll let Krishna talk about his journey.
Thank you. One data point, there are about 378,000 HNIs as per Hurun list in India. Chennai has 22,800 and we have less than 100 people here today. So you can imagine the potential that the HNI group and Chennai has got to create how many more entrepreneurs. Why should we create entrepreneurs and why should we do innovation? One of the reasons and society grows and economy grows is because of innovation. It doesn't grow by just making more cars, making more services, but seeing how smarter we can deliver the services, how cheaper we can deliver. The economy expands largely by innovation. So innovation comes only through startups, if you really see. Startups is a source for innovation, which is very clearly. So now why AIFs, right? Why AIFs and why not do a startup directly? So all of you can invest directly, we can also invest directly. But the fear I heard at least twice or thrice today in the evening saying, I don't want to lose capital, I'm worried about losing capital. The reward, if you all studied economics, right? The profit is the reward for risk taking. And if you take risk, there's a bit of risk on the capital as well, right? There's a bit of risk. So for those who don't have the heart to take such a risk, what do? They have to spread it. As an individual, what do? You put some money in gold, some in real estate, some in stocks, some in debt. So similarly, when you invest in startups, you don't do one or two. Because the probability of losing maybe 50% or 100%. It could happen, right? So you put in 10 or 12. So I'm asking you to put more money. You may not be able to put in 10 or 12 because you may not have so much of money. So how do you do that? So like Twinkle was explaining, you put the money in the AIF. The AIF is willing to take the risk and manage it and puts it over 10 or 12 people. So maybe there's some capital erosion in some. There's huge capital appreciation in some. But overall, what you'll find is there'll be capital appreciation. So therefore, for those who want to be the first-time investor and they want to spread but don't know how to spread by themselves, AIF is a good vehicle for them to spread. They can put their money there. Very few AIFs in Chennai, right? Right, Twinkle, very few. Yeah. Right? We are one of the oldest AIFs in Chennai, 18 years in there. Twinkle doesn't even have an office in Chennai. So I'm personally, as a Chennaiite, as a Tamilian, I'm very motivated to encourage all of you to participate in AIF and set up AIFs in Chennai. So hopefully large law firms will come and set up office in Chennai. And the city, which is known for entrepreneurship from time immemorial, will also be known for AIFs, right? Mamta spoke a little bit about fund of funds and SIDBI. So I'll just give you an example. In our last fund, we invested in a NBFC, a rural NBFC, which was meeting the criteria for SIDBI's investment. So it ticked the box, our contract was ticked, everything was done. What did it create? It created 1,800 jobs in tier 3 and tier 4 towns. That company created. That company also gave loans to about 12,000 people in the rural households. It created, through a tractor system, about 1,000 micro entrepreneurs. Look at the cascading impact of investing in a startup and investing in entrepreneurship and investing through fund of funds. So sometimes we underestimate the contribution the AIF makes to the society, to the economy. We only look at, okay, let's put money, let's make 5x and 6x. But under that 5x and 6x, or maybe sometimes a 0.5x, there are so many jobs that have got created. So much of cascading impact on the economy which has got created. And that, I think, is our capitalist way of contributing to a socialist cause. That, I feel, is an unstated story of AIF. So please invest in AIF is what I would say.
Yeah, thank you. Yeah, I think Krishna spoke about risk and reward. See, we are into early stage investment, mostly. So in the early stage, my view is that risk is the reward. So that means you don't look at risk versus reward, because it's risk is the reward. And there is also, so one point he mentioned is that if you invest through an AIF, your money is spread across maybe 10 or 23 investments. So definitely, you get your capital back and you get some return. So that is definitely much safer, and he was also quite transparent in mentioning sometimes you will get 5 to 6x, sometimes you may get even 0.5x. So that's the reality even when invested through the AIF. But if you are an entrepreneur and you want to invest, like why, while I am part of the AIF, Krishna runs, and part of Stira also, but one thing that I find exciting when you are engaged with the startup directly, because in an AIF, like Twinkle mentioned, there are professional managers, it is a SEBI-regulated entity, and there is less scope for emotional decision in investing. So the larger the fund is, the more science it is, right? Whereas, let's say, a new baby is born in your family, right? All of us say that, our child is very intelligent, very bright, very active, and things like that, right? But how do we tell, when, like at a very young age, which child is going to achieve what, right? Many times in school, we see a last bencher whom teachers write off, going and outperforming every prediction that is made, right? So that means if you are investing directly in startup, so one thing you get to see is that messy, indisciplined, sometime naughty, sometime high energy, sometime focused, whatever words they are, right? That's how the startup presents themselves to you. The founders present themselves to you. So in an early stage. So if you see, probably 80% of the companies that come in Startup Singam are those, you can say they are, in a play school or a preschool or in a, kindergarten kind of kids, 80%. Maybe 20% startups are in primary or middle school or high school, right? So, if you are an entrepreneur, like in Tamil, there is a saying we say, Pambin kal pambariyum. That means a snake's path, only another snake knows. So, if you have been there, done that, you have built companies and things like that, will you be able to see that spark in another founder? Will you be able to bet on that founder? Right? So while I agree that the risks are high, but given this investment is both a science and an art. Basically, there are science aspects in terms of what is the skill of the founder, what is the problem he is solving, does it have a market and things like that. The art portion of it is, what is the commitment level of the founder, right? What is the grit? Will the founder run away faced with a challenge, or will he stand up and face it? Because every journey, whether they are funded or not, whether they are mentored or not, is a roller coaster ride, right? And like they say in English, right? Only when when things become tough, the tough gets going, right? So you will know that only when a founder is presented with that situation, whether they have it in them to continue and fight and build and things like that, right? Only when they have competition, intense competition, you will know whether they have the competitive spirit and the killer instinct to win in the market. But those are all, you can say some informed, intuitive decisions that you take, meaning you can go wrong, right? But I would say a lot of, in my opinion, a lot of the, whether it is money or whether it is some kind of sounding board, some kind of, you can say, opportunity, additional opportunity to learn. I am consciously not using the word coaching, managing and things like that, because when you invest in a startup, you are not hiring another, manager or another leader for your company, right? You are investing in a startup founder. We have to give them the space, the time, and the scope to make mistakes and learn everything. But can we be the sounding board, right? Can we be the like basically give them the options? Can we, without judgment, can we allow them to think, make them think, ask them some open-ended questions so that they make their own decisions, right? So in the early stages, if we are able to be that and give them some capital, maybe the chance of survival of startups increase by some percentage. Maybe the speed at which they can scale increase by some percentage. And then maybe, like overall the number of jobs created and the impact this capital has is much more. So in my view, when you work as an individual investor in a company, while I agree there is no, the regulation, protection, everything, you are protecting your own capital. So that means you are making your own decision. But, you have more, freedom, and that freedom definitely comes with responsibility. But you have been there, done that, and you don't bring that attitude into that investment, saying, I have been there, done that, I have more gray hair, so you better listen to me with the founder. Then the chance of success of the founder increases, and definitely failure rate will come down and you will be much more successful. And I think AIF's work when, basically something like a child has completed 10th standard, their public exam marks or their interest, and the child knows what their interest is, whether they want to make it a lifestyle business, whether they want to scale and grow and things like that. And I think that is where more institutional, formal capital helps, where more scientific decisions can be made. So I would like to basically distinguish between the idea stage and the very early stage investments, where the HNIs and the entrepreneurs who have been there, done that, can do, and where they can also invest in AIFs, where these companies have some level of maturity to pass all the, the professionalism and institutional frameworks that are there. So that's my thought. Thank you.
I just want to add two important things to what Kumar was saying. I think one is, the due diligence process that the funds use. There's a lot of detailing that you go into. Detailing about individuals, detailing about the legal aspects of the company, about the commercial aspects. And I think, and typically it's done by a third party. You employ third party due diligence agencies who actually go into a lot of detailing and then come back with what are the gaps that you may not have seen otherwise. And it's a process. It takes almost 2 months, 1 month to 2 month kind of a detailed assessment, which actually sometimes leads you to a lot of revelations that you may not have thought about earlier during your process of evaluation. So that as an AIF, becomes very critical because you're managing third-party capital. There's a lot of fiduciary responsibility. And, in fact, that's one of the things, the process that you follow. In our case, for example, we have a pre-IC, then we have an IC, first level IC, then there's a due diligence process, then there's a second IC, then there are this lot of negotiations after that on the contract. So I think it's a long drawn process, but at the end of it, you know what you're dealing with, and you know what the real gaps are. I mean, of course, you cannot do 100%, you cannot be 100% right, but you still, at least, you know what you're dealing with. So that's very important aspect, and a very key difference between, investing on your gut and in a very short period of time versus taking proper process, following a proper process. The second piece is typical AIFs come with a time frame. So if I have a 10-year fund, the first 3 years I'm investing, and my average holding period of an investment I'm taking, let's say 5 to 6 years, which means I have to exit. I have to exit because there is a sword hanging on my head that the fund will complete its life. The money has to go back to the investors. If I don't return that money, my own career is in danger because my next fund will not exist. So therefore, at the time of investment itself, I have to make sure that I figure out my exit path. So I don't want to be like Abhimanyu of Chakravyuh, because basically I want to make sure I know how to get in, but I know also how to get out. And therefore, there are lots of discussions that happen early on the exit clauses. So therefore, typically we are very, very sensitive about how we're going to exit. So that piece also creates some kind of a discipline with the founders in terms of how they're reporting to the investors. If you're not going in that path which you had committed to going on, the chances are that you will not reach that point where you were thinking of getting an exit. So you may have to then either accelerate an exit or think of alternative ways. So I think many times people don't understand these aspects, especially when you're dealing with investing directly versus investing through AIF.
Yeah, I think that's a very interesting point to bring across in terms of diligence and fiduciary responsibility. So a couple of interesting thoughts I want to leave behind here. One is, I think you spoke about AIF2, and we didn't talk about, I'm not talking about pooling vehicles or angels, but the minimum requirement for an AIF as per SEBI is 1 crore. 1 crore rupees. So it's not a lot of money. It's a lot of money, yes, in India, but still not a lot of money for many of you in this room, I'm assuming, right? And you don't pay that 1 crore in one shot. You pay it depending on the fund's investment pattern between 3 to 5 years, right? You pay it over 3 to 5 years over the period of time. So therefore, I'm saying it's kind of affordable. That's one data point. The second data point is all the AIFs have to go through what is called a benchmark survey done by 3 institutions. One of them is CRISIL. So IVCA has actually pioneered this. We are the only country in the world where AIFs are benchmarked and the reports are available. And when you invest in AIF, you can ask for a report, which means you know how this AIF is performing vis-a-vis the peers. So even in the unlisted space, can you imagine you're actually getting a benchmark report to know how they're performing vis-a-vis others. So you can take a conscious decision of what you need to do, how to invest. The third interesting thing that SEBI has done, a minimum of once a year, and normally twice a year, an independent fund valuation of the investments have to be done. So it's independent valuation of the investment. So what we call the mark-to-mark valuation, is it real, is it true, untrue? It's independent. Like for example, in my fund, BDO does this, then EY does the audit. Many other funds, you also have similar. So what happens is that gives you a lot of transparency. And every half year you get the statement, which is valued by somebody independent, and you get those statements. These are all protection clauses that you have. Should you decide to do something of this sort, there is something called the accredited investor. I think you briefly spoke about it. There's something worthwhile for all HNIs to do. HNIs will qualify, there's no doubt. You just need to go through that process to do that. That makes your investment very easier and simple. So there are interesting clauses for HNIs to go through this AIF structure, both in terms of protection as well as transparency and visibility of what you're doing. So that's what I wanted to add.
Yeah, I totally agree with Vikram and Krishna about the importance of due diligence. In fact, even when we invest our own money, we basically do a very in-depth due diligence, and in fact, we spend a lot of time with the founders, our team. So while we have a third party that will do the financial and legal due diligence, we also spend a lot of time to do our own business due diligence, because we understand the business, and most of the time what we find is that people who do financial due diligence or legal due diligence, they don't look at business, but it's the business that is creating that, the finances or the legal things or whatever. So I think, I would still, basically say that for an entrepreneur, because in India, what is the shortage today, right? So the institutional funding, when somebody is actually ready to take it, because it's basically like when a AIF does the due diligence, they have to tick, let's say, 50 tick marks. Whereas when as an entrepreneur, you invest in a founder, you may find 25 things to be weak. And you may find 3 things to be the reason why somebody can win. So the stage at which they are in, it's the strengths that matter more than the weakness. Because with you can make the founder think about the weaknesses and help them address. For example, in the Startup Singam program itself, we meet founders who only know how to build the product. So they don't even have sales and marketing, and whatever sales they do is founder-led sales. And the founders, most of these founders, including me, when I always suck at sales, right? Because a techie is never a good salesman, right? So, or rarely a good salesman, because I won't say never, because there are also some techies who are awesome salesmen. But that's the truth. So, but we know. So when we get in, for example, we know I can relate to those founders. So it's more about whether the product will win or not, and when do they rightly transition to having somebody in sales. Because if somebody hires a salesman, brings a sales leadership too early, they will get frustrated and they will demoralize the founder also. And when they get the person too late, the sales won't be able to perform, right? So those are the things. So I would say in early stage, like the fun is in working with the founder, and how you can actually make the founder understand, what are all the skills and competencies and leadership that is required to succeed, and they think about it proactively and plan for it, rather than making mistakes and falling too many times and sometimes getting killed in the process and things like that. So in my view, while I am actually part of, as I think about it, three AIFs now. I am also, I have invested in Speciale Invest, so I get good returns from all of them, and I do bad for all of them. But I as a as an entrepreneur, I enjoy directly investing in the startups and working with the founders.
Should we take a few questions maybe? I think.
Well, ladies and gentlemen, I'm sure you might be having a lot of questions. Please do raise your hand so we can come to you with a mic. We'd like to open the floor for Q&A now. Anybody? Okay, so we have a question at the back. Okay, sir, after this. Sir, please go ahead. Please introduce yourself and you can go ahead with your question.
Yeah. Good evening, sir. This is Ram Kumar from NatWest Constructions. So we have been seeing lot of startups from US under artificial intelligence. Are there any companies that are coming up in India as well? And are you investing any money into those companies? Because billions and billions of dollars has been pumped into these AIs.
So we are investing quite heavily into AI. I'll give you examples. So there's a company called Spectre.ai, which is predictive maintenance. So basically they work with all these factories, with a lot of this equipment that otherwise if can suddenly fail, and all of a sudden your entire factory will be in downtime. So these guys have figured out solutions for that where they will know in advance when a particular equipment is going to fail. So that's one. There's another company called Elucidata.ai, which is a drug discovery company. Now, wherever there is a huge amount of data which can be put into a structured format, you have an opportunity to find an AI solution there. So pharma companies go through a long process of bringing drugs to the market, and drug discovery itself can be a very expensive and long-drawn process. So we invested in these two young IITians who actually developed this product where they're able to compress the time quite substantially for this drug discovery and therefore also bring down the cost quite substantially. So we are actually seeing a lot of innovation happening on the AI side in multiple areas. So, and whether it's retail, we are even seeing innovation on the retail side, camera vision technologies, where people are using camera vision for various different use cases. And there are opportunities emerging even on the deep tech side. We are seeing hardware, for example, we're seeing a lot of opportunities building there. So actually, we're quite excited about the kind of tech which is now coming from India. So that's, I'm sure even you're seeing this.
Sarvam, started by two of them. One of them is a Tamilian back in our backyard, supporting the government sovereign AI platform, which has become a unicorn. I think it's a great example. I think so. They're enough and more. Yeah. They're enough and more here.
Yeah, actually, Startup Singam had an AI episode that will be aired on coming Sunday. I think 19th at 11 a.m. in Vijay TV, and it will be in Geo Hotstar also. So that AI episode had all three startups that are AI startups. So I think all three of them got funded on the platform.
Good. Thank you.
Thank you, gentlemen. Thank you, sir. And over to the last cluster table.
Hi, sir. It was a very enlightening session. My name is Roland, and I have a question, rather multiple questions, but I'll just quickly wrap it up. So first thing I would like to understand is, you mentioned about multiple sectors, and Kumar Vembu sir has invested in sector agnostic style, and you into healthcare, and Krishna sir is into fintech and stuffs. So I would rather be more specific into what kind of signals that you investors see, especially in the new age, startups where the agentic AI and other deep tech startups that are emerging. So what signals that you see and what patterns that you see in those in those founders that you that you see that that you can bet on. So that one question, and the next question is regarding, I'm representing a family office as well. So I just want to understand, like, what is the scenario of the, the sentiments of family office towards the startup investments and how you are observing that. And, maybe few insights of yours could, help us, think through it, and maybe, we can work around, building those funds through family offices as well. So these are the two questions I have.
So your second question
Yeah.
on family office is very interesting. Globally, family offices large family offices allocate about 20% to the unlisted space, which is combination of direct investment in unlisted and AIFs. In India, very large family offices invest less than 10%. This is a number. In the last 7 years, the number of family offices have increased by 7 times in India. About 4,000 plus large family offices are there today. And family offices invest in startups or early stage for 2 or 3 reasons. One, because it creates adjacencies to their existing businesses. So the businesses they may have in real estate or software or auto manufacturing. So they invest in those places which are adjacencies to the business, which can later be integrated with the business. That's one. Second, as I said, there's a bit of a social commitment. I was in a CIA event with Krishna Ramachandran, who's the founder of, and he said every family office must invest in startup. Must, he said, because you're responsible to develop the nation, and therefore you must invest in startup to build that. So by the time you become a large family office, it becomes a second reason for family office invest startup. The third reason that I'm also seeing is multi-generation of wealth, and no comment on anyone, but the younger generation today doesn't want to run the traditional family business.
Yes.
So they would like to run family offices. So in family offices, like you mentioned here, you get the thrill of being an entrepreneur by investing in these early stages. So you still have an entrepreneur, but you're not a full-time entrepreneur. So there are broadly 3 reasons that we see people investing in a family office investing in startups.
Right. So have you seen any patterns in the, especially in the southern region, like, if you see the Congo belt or, the down south, there are a lot of high net worths, who doesn't know they have the capacity to run, convert that assets or holding company into a family office setup. So have you gone through such kind of, episodes where, you were in the position to convince those people to, set up these things? Because
it is very difficult to have number. I don't have the numbers, but I'll tell you, now there are 72 Indian cities where from where we have people in the Hurun list, which was less than 15 5 years ago. So which is an indication of the wealth in the non-metro cities. That is first.
Right.
Second, in our last fundraise, we realized that tier 2, tier 3 towns have very large family offices, right? Very large family offices, which are actually quite active, but they're active quite regionally. So quite active regionally, and they do in adjacencies. They don't do it like in large scale elsewhere, but they're very successful.
Okay.
They're very successful.
And for them, do you still suggest an AIF route or through direct investments?
Both. See, it depends on your size, right? It's so if you're I'm just saying, if you're a 1,000+ crore family office, you'll do both. You'll do AIFs it's a risk management. You'll do direct where you understand the business very well. So I'm saying if you're
just to add to that, actually, if you invest through an AIF and look for co-investment opportunities along with the AIF, it actually also gives direct exposure. You will get the best of both actually in that sense.
That's great, yeah. Thank you.
Yeah, so exactly. So many family offices invest in AIF specifically for this reason, as Twinkle said.
Yeah. I can't resist from pitching about Startup Singam here. So pardon me for that. Basically, the program
said you're not a good salesman, but that's not true. This is Chennai at modesty at its best.
So as Bala mentioned, see, one of the objectives of Startup Singam is, to create the awareness about opportunities in startup. So you can say maybe Startup Singam brought, at least 75 HNI, HNIs to the platform where they participate in startup investment now. Maybe in the next 3 years, 5 years, if there are success stories about successful exits from the startups, then there will be more and more HNIs and family offices that will come forward and invest in startup. So the thing is, when you invest in a AIF and have a successful exit, you only pay taxes and nobody knows about it. Whereas when you make an investment as an HNI and have a successful exit, probably it will become a news and it will inspire other people also.
All right, sir. Thank you. Thank you to three of you. And sir, should you have any more further questions, please take it offline. And moving on to the next question. Anybody else? We would love to request you to please keep your questions sharp and crisp. Anybody else? No? All right, then, sir, are we good to close the session?
Yeah, maybe I'll just say one last thing.
Yeah.
And I want to add to that, I want to also say good words about Startup Singam. I think I have to give a lot of credit to that. I've been listening to all your stories this evening and really very, very impressed with the way you have mentioned how you've been doing this. And I think the actual funding going into startups, you talked about 25 crores in season 1 and almost 110 crores committed, and there's a lot of that funding already going into startups is actually amazing. So congratulations to you for achieving what you've achieved, and it looks like a great platform and would love to be part of that as well. I may need some subtitles in English though, so that's fine. So, but I would love to, or I would love to learn Tamil as well. So, thank you so much.
Thank you, Vikram, and I also want to thank him because the college I come from is going to be about 75 years next year, and it has a very strong alumni network. So your idea of this endowment to give back is a great idea. I'll definitely discuss it with, in our alumni forum. I'll take your number and take your advice to set it up for our college. Thank you very much, and many thanks to Krishna for sharing statistics that I didn't know, and I'm really surprised to know that there were close to 23,000 HNIs in Tamil Nadu, and I think Hem's target and Bala's target are very clear now.
By the way, that's only Chennai. There's Coimbatore, Salem.
Okay. Yeah. Because they are celebrating 100 as a milestone, now we know how many zeros to be added.